Welcome to the Kaiser Report. I'm Max Kaiser. A man in the UK has been tasered by police after he allegedly burst into a Barclays bank branch with a makeshift flamethrower and threatened to burn the bank down to the ground after they had refused him an overdraft. I don't see the problem with this. After all, it worked for Wall Street, didn't it? The so-called credit crunch was effectively Wall Street being denied an overdraft. And what did they do in response? They sent former Goldman Sachs CEO Hank Paulson to Congress with a flamethrower and threatening to burn the place down unless they extended Wall Street trillions in new untraceable credit. And last week, Ben Bernanke promised to extend their overdraft by $85 billion per month. So what's wrong with a little bit of trickle-down flamethrowing? Stacey.
Max, I don't see the problem here. Why was this dude tased?
Don't tase me, bro. Yeah, why was he tased? He's just doing what the other guys are doing. The problem is, on Wall Street, they have a saying, go big or stay home. He shouldn't have gone into the bank with a flamethrower asking for an overdraft extension. He should have gone into the bank asking to have the bank given to him as a present for being such a nice guy and having a grenade, a flamethrower, and a few other little niceties in his bag of tricks.
Yeah, well, in fact, it's very similar to the situation with Hank Paulson going to Congress, because remember at first when he went in with the flamethrower, it was rejected, and then what happened? They threatened to burn the whole, they threatened to commit suicide with the whole banking system, and this guy also did that. He threatened to, after the flamethrower didn't work, he threatened to ignite himself. So the article is, man who had been refused overdraft extension is tasered by armed police after bursting into bank with a homemade flamethrower. Now, the interesting thing is, it's, of course, the UK, where they're a little bit more stiff upper-lipped about things. Jackie Clover, who runs the Clover Tea Rooms opposite the bank, said, quote, "We heard that he had got upset as he had been turned down for an overdraft extension. Maybe he was someone in business who had got to the end of his tether." Right.
Well, I mean, the point is well made here, that what the crisis was all about in 2008, it was not about a sudden change in business prospects. It wasn't a once-in-a-100-year flood event that nobody saw coming. It was a bunch of banks who got themselves in over the head, who needed their overdraft extended. Hank Paulson, and you're right, he did. They threatened martial law in America, if you recall, and also Wall Street, which means Goldman and J.P. Morgan, crashed the market the day after they refused their overdraft protection. So they use this, what I call financial terrorism, and I see more and more people are using this term to describe accurately people like Hank Paulson as a jihadi who is willing to blow himself up for his cause of market fundamentalism, and I'm glad to see that is catching on.
So Jackie Clover hypothesizes that perhaps he was just at the end of his tether. So I'm going to look at some reasons in the headlines that follow that he might have been at the end of his tether. Well, perhaps his home was earning more than himself. Houses beating households, London edition. The average house in the capital is now earning as much as its occupants. With the average London house costing £438,000, the capital gain was worth £38,729. By comparison, the average London household had a post-tax income of £38,688 in 2011, the last year for which the ONS has statistics. So that, Max, is £4.42 per hour, every single hour of every single day.
Right, so the house prices are appreciating at a rate faster than income. Now, the Bank of England under Mark Carney says there's no inflation because they don't include house prices when they calculate inflation. They include things like electronic equipment where the value is constantly plunging due to advances in computer processing unit, CPU technology. They include slave-made labor clothes under Primark, that's sold by Primark, but they don't, which are all going down in price due to the fact that the people who are direct beneficiaries of quantitative easing are using those bailouts, those credit card extensions, to buy factories in Bangladesh, to buy slaves, to then re-export into the UK slave-made goods, which people are then buying at a cheaper price. They say that's deflation. Meanwhile, however, the wages are not catching up with the house price, and they don't include that in the inflation statistics. So net, the average person in the UK is experiencing extraordinary inflation, but the government pretends it's not there. And if they pretend it's not there, then they say it doesn't exist.
Well, it's also a way that they could possibly manipulate in a hedonic adjustment sort of way the GDP figures for the nation. So if their own population of human beings with, sentient beings, if they're not earning income, then they could just start including houses in the overall GDP in terms of workers and employment picture. So the average house is gaining by 110 pounds a day here. The average person in London is earning 90 pounds a day.
Right. No, well, GDP, of course, when they calculate GDP, this is inclusive of the output of the nation, which includes, in many ways, what's going on in the housing market. So they say that the GDP is rising. However, when it goes to looking at individual workers and their wages, they say, well, there's no way we can pay you more because we see, in fact, deflation. So when workers are experiencing deflation, by definition, by the government, therefore they don't get any kind of increase in wages because it's deflation. However, bankers on Wall Street get huge bonuses because house prices are moving up, and that's, of course, causing GDP growth. They're causing the nation's wealth to expand, so they get a bonus. But so for them, there is inflation. But for the average person, they don't get any kind of cost of living adjustment, the so-called COLA, because it's deflation because the house price is not included in the CPI number. So this is what we call apartheid. If you're poor and you work for a living, or anyone who's working for a living, not just poor people, anyone on a wage is considered to be on one side of the apartheid wall. They live in Gaza. And then everyone else lives in frickin' Tel Aviv. Everything's great for them. They're benefiting mightily from it all. So you have this extraordinary bifurcation of society using financial statistics instead of just an actual physical wall and guns. So this is the innovation of the 21st century is financial apartheid.
Now, in terms of whether or not this is a bubble, of course, we know that George Osborne has this Help to Buy scheme and all sorts of other government subsidies for house prices, particularly here in London. But they also provide a chart in this article of how many in London expect house prices to rise over the coming 12 months. And it goes back to February 2009 on the left up to present day. So as you see, it's soaring. People think house prices, 90% think definitely house prices are rising.
House prices are rising because of George Osborne's Ponzi scheme, as we've discussed it on this show. But when you have house prices rising at a rate that's faster than underlying economic activity, then you've got distortions in the market that will result in either A, a crash in the gilt market, the bond market, B, a crash in the housing market, or C, social unrest. So, but when the social unrest comes, if nothing is done to address these excesses in the jihadists in the City of London to curtail their suicide debt, then I rue the day that when there's a million people rise up with torches and pitchforks and go into the City of London and start doing what needs to be done to restore balance. I just rue the day when BBC has a headline saying, "Nobody saw it coming. It was a surprise. Who could have predicted this?" No, you freaking idiots. It's baked into the cake. Just look around you. There's a financial wave of terrorism all over the city, and you're part of it because you don't even report on it.
Well, so back to Mr. Flamethrower. Maybe he was despondent because his house is earning more than he is. Or maybe after all, because he was over 60, perhaps after working all of those years and saving all that money, he's despondent by this next headline. Billions of dollars wasted on investment advice. Pension funds and other large investors are throwing away billions of dollars a year on worthless advice from investment consultants, according to academic research. So they looked at all of the research and what all the consultants like Mercer were recommending to pension funds, and over 80% of pension funds use these so-called consultants. And what they found on an equal weighted basis, U.S. equity funds recommended by consultants underperformed other funds by 1.1% a year between 1999 and 2001, according to analysis of 29 consultancies accounting for more than 90% of the market.
Now, if you have a low IQ, there's two jobs that are suitable for you. One is to be a cop, because you want people to just take orders. You want order takers, and cops and soldiers, et cetera, fit that category. It just happens to be true. Now, the other job you can get if you have a low IQ or you're borderline imbecilic is a pension fund manager. And that's by design, because they want these idiots to buy the stupidest frickin' investments they possibly can. And as your headline points out, tens of billions of dollars is wasted annually. Look at Robert Citrone, famously from the pension fund of Orange County, California. The man had the intelligence just barely above that of a bag of hammers. And that he's put in charge of billions of dollars, and of course he blew it all on some stupid, ridiculous ideas that he was involved in. But that's systemic. It's all over, endemic throughout the industry.
Finally, here Mr. Flamethrower was, of course, tasered and bundled away in the back of a police van. Well, here's this final headline, Max. Slump in FBI white-collar crime prosecutions. I'll just show you the chart. And this is from 1993 to 2013. The blue area is under Clinton. Those are the number of prosecutions of white-collar crime. Orange, Bush 2, that's, as you see, a drop from the Clinton era. And then green, the Obama era, yet another further decline. So despite the flamethrowing, despite the banks across the world being burned to the ground, pension funds being burned to the ground, there are fewer and fewer prosecutions.
Right. It's financial apartheid. If you're white-collar, then all is fair and good. You can commit any frickin' financial crime you want and suffer no penalty. In fact, matter of fact, get a huge bonus. If you're not white collar, then of course you live on the other side of the apartheid wall. You pay Wonga 5,000% to borrow money. You get prosecuted for every nickel that you don't account for in some way according to some invasive NSA spy program, and you're thrown in jail and become part of the prison industrial complex. All right, Stacey Huber, thanks so much for being on the Kaiser Report.
Thank you, Max.
Don't go away. Much more coming your way.
Does the media lead us or we lead the media?
Privacy versus security. All right, your party, where's it going?
The questions that no one is asking with the guests that you deserve answers from. It's all on Politicking, only on RT.
For over 7 years, we have detained hundreds of people at Guantanamo. We're cleaning up something that is quite simply a mess.
The place with no way out.
Clearly, they were just at the wrong place at the wrong time and sold to the U.S. or turned over to the U.S. for bounties.
The soul that could be buried alive was saved with great effort.
They wanted to turn me into a terrorist. They wanted me to admit that I was a member of Al-Qaeda and the Taliban and that I fought with them. At that time, I didn't even know what Al-Qaeda is.
Nevertheless, there are people brave enough to start a fight.
If something's going to be done, it's going to have to be done by me, and it's going to have a short amount of time to do it. But it's going to impact me. I'd be prosecuted, but it's going to impact my wife, my daughter.
The Guantanamo Trap on RT.
Welcome back to the Kaiser Report. I'm Max Kaiser. Time now to turn to Mitch Firestein, author of this instant classic, Planet Ponzi. Makes a great Christmas gift. Mitch, welcome back to the Kaiser Report.
Fantastic to be here, Max.
All right, Mitch, you have charts, and as always, and this is the Fed's balance sheet chart. Tell us about it. Warren Buffett says the Fed is the greatest hedge fund in history. Is this what the chart is telling us?
I don't know if I would call them a hedge fund, but Mr. Buffett has certainly profited off the backs of everybody else because he has a heads up as to what the Fed is going to do pretty much because they're in constant communication.
Why wouldn't you call it a hedge fund?
Well, I think they have deep pockets. In other words, they've got printing presses.
And they're buying securities. They buy in securities in the open market. They buy stocks. They buy and sell gold. They buy and sell bonds, and they're trying to make money. just like a hedge fund, and they're 60 to 1 leveraged. How is that different than Deutsche Bank? How is that different than Goldman Sachs? It's just bigger version of the same nonsense.
But there's only one problem with that, Max. You're right in one aspect, but they're only buying. So it's the giant Roach Motel. There's a big welcome sign for these toxic assets and for treasury bonds, but there is no way out. And I don't think they realize that yet.
But they're also.
If you look at the
I'm sorry to interject here, Mitch, but they're also. We know that in banks like J.P. Morgan, they are actively selling gold and silver.
That's right, because
that's a sell.
But it's the end of it's the end of the fiat scam or the big Ponzi scheme until they cannot suppress the prices of physical silver and physical gold. When that stops, that's the end of the game. Now, if you go around the world and you look at what's going on, real estate and asset bubbles have festered to the point of almost ready to implode. Now, I don't know when that's going to happen. I'm not a bright enough guy, but when you keep printing and printing and printing and printing. Now, the ECB, latest was Draghi said he's going to come out with another $1 trillion LTRO. Zero collateral. I mean, the collateral that they're accepting is Spanish subprime. You can go on the ECB's website and have a look. Some of that collateral is pretty scary. It's worse than American subprime.
Let's talk about what that means. The ECB, European Central Bank.
Correct.
They're the last, really, of the majors to expand their balance sheet. You had Japan's been doing it for decades. The Federal Reserve Bank in America went from 800 billion to over 3 or 4 trillion. Same thing in Bank of England. They've expanded their balance sheet by 400 or 500% over the past 5 years. They're going to continue to do so. But the ECB was the last into this. They're now expanding their balance sheet. The idea is that they'll take all the toxic debt, they'll take all the bad bets that were made by bankers in America and Europe, and they'll swap it for fresh treasury bills. And they won't reform in any way. They won't curtail the leverage in any way. They're just giving them a green light. Here's fresh collateral. Keep doing what you're doing. Keep paying yourselves these enormous bonuses so that the house prices in the UK on an hour-by-hour, day-by-day basis are rising faster than the average worker is making per hour. So the average house price in the UK, in London, is going up like 130 pounds an hour a day, et cetera.
It's faster than the speed of light almost. But we've got actually two charts here. We've got a chart of London house prices, and you can see how that goes upward sloping to the right, which means it's a bubble. Now, can you pick the top of a bubble? I don't know. I called the top of Apple when it was trading around close to 700. I wrote an article in the Huffington Post, and I was slated. Everybody told me 250 people wrote in and said, you don't know what you're talking about. And I said, look, Apple's a great company, but it's a barrier to entry that's very low to get into the technology market. It's not ExxonMobil. Getting back to the housing chart, if you look at it, it's massively upward sloping. This chart illustrates that. And then there's another chart that we have illustrating wages. Wages is the opposite way. So since the beginning of time in history, in every real estate market in the world, Max, there's been a correlation between income and housing prices. There has to be. Housing lacks the liquidity to be an asset class. And I think people mistakenly say that housing is an asset class. It's not. It's an asset bubble created by excessive money printing around the world. You're seeing the bubble in the Chinese housing market, in Hong Kong's housing market, in...
Okay, simple question. Why does the government subsidize house price speculation with guarantees instead of subsidizing wages or workers or creating work?
Well, what they're doing is using it as a component of GDP to puff it up. To puff up GDP.
Right, so rising wages do not contribute to expanding GDP in an economy such as the UK that's based almost entirely on borrowing and speculating, because the worker over the last 30 years or so has been squeezed out of the GDP equation. GDP does not include work for a job to get wages. It doesn't include it anymore.
Well, you can't pay your way out of debt with borrowed money. So the program, the Ponzi scheme program of putting the taxpayers at risk by backing 95% of housing loans is madness.
Okay, well, let's dig down a little bit. I want to dig down. Damn it, I want to get in here. You say, look, GDP is based on components where the workers' wages are not really heavily weighted or a factor. For this reason, taxable income from workers doesn't contribute toward the ability of bankers to get free money from the Bank of England to continue their borrowing and speculating. So unless you're a borrower or speculator, you're not included in this GDP calculation anymore. As a matter of fact, you're not needed. and you're being asked to walk the plank, in essence. What this government, this coalition government, is telling the average worker in the UK is, go top yourself. We don't need you.
The point, very good points, Max, but I mean, if the government really was serious about helping people out, I mean, the Miliband scheme is ridiculous to cap different prices. Richard Nixon tried that. It didn't work very well when they tried these price controls. What they should do is immediately sign into law in Parliament a law that will prevent companies like Wonga from charging people 5,000%. They have usury laws in many other countries. They had them in the UK, and they stopped them. But that should be done away with immediately.
Okay, that's financial reform.
Right, that's financial reform, but it's not in their interest to do that. And as the housing bubbles and bubbles and bubbles, no matter how much lipstick you put on a pig, at the end of the day, it's never going to be a supermodel.
Okay, let's talk about Ed Miliband, the supermodel lipstick with the pig. The pig with the supermodel lipstick. The lipstick on this pig, try to turn that. Okay, so Ed Miliband, he made a comment at the recent labor conference that it used to be the rising tide lifted all boats, but here the rising tide is lifting only the yachts, which I thought was very insightful.
Well, the rising tide hides the dead bodies at the bottom, right, which have become victimized by the money printing. The money printing and the QE is going to go on. The taper talk and taper tantrum that you saw is ridiculous. They can't get out because what you have is a zero boundary on interest rates. Since 1981, interest rates have come straight down, okay? We hit a low last year of 1.43 in the 10-year, which is what they base all risk off of in the United States. Bernanke said QE3, QE4, QE insanity, QE infinity, whatever it is. He's an academic that's never had a job in his life, which most of them are, which is part of the problem. And they're neo-Keynesians, which is a Keynesian on steroids, which makes it even more dangerous. He said the reason why this QE, we want to keep long-term rates low on an extended time frame. Now, so what happened? The rates doubled to 3%, and they've come off a bit since. But we've seen the historic low for interest rates. I think you called it, which was a good call, Max. I called it.
Talk about calls for a second, because you called the fact that the Fed would not taper, could not taper. You said that on the show, I believe. You're saying it for the last 6 months, for a year. This taper talk was a hoax. They can't taper because it's like Bernie Madoff suddenly saying we're going to start returning people's money in a real-time basis. He couldn't because that would destroy the Ponzi scheme. The only difference between Bernie Madoff and Ben Bernanke is that Ben Bernanke can print his own money. If Bernie Madoff could print his own money, he would be Fed chairman today.
Yeah, I mean, there are a lot of things that have happened. I mean, everything has changed. Since the credit crisis, the beginning of the credit crisis, because we're in the throes of it now, they changed mark to market to accrual-based accounting, which means mark to fantasy. It's the same thing that took Enron down, and it was a big part of the problem when Enron failed. It's because of the accounting principles. So this can keep going on. I mean, refinance in the United States has dropped 65% in the past couple months. So I mean, the one-trick pony is coming to an end. We're coming near that wall, and we're going to hit it. We're going to hit it hard.
Okay, so to put that into context, the response to the bubble that burst in 2008 was to reinflate the bubble, which means housing and stock market bubble. You're saying that look at what's happening in housing now, and look at the building stocks also. The housing bubble that was reinflated to mask the underlying criminality is now starting to roll over. You're seeing it roll over in housing. And probably at some point you'll see it roll over in stocks as well. Yeah, and at the end of this, you have a collapsing housing, collapsing stocks, so the situation will be as worse than it ever was, except the debts will be, of course, at record highs.
And they're just going to print more money. Instead of 85, they're going to print 160 or 200 or whatever it takes, as Draghi would say. But it's interesting, if you take last Friday's close in the Dow, it was down 185 points. So if you adjust that because they took Bank of America out and replaced it with Goldman. Goldman seems to have its fingerprint everywhere, its tentacle maybe everywhere. The difference between 185 and with the components of Visa, which Nancy Pelosi was an insider while she was deciding what they could do on the IPO. So when they took those, if you took those components out, it would have been down 114, which is a 40% difference. So, numbers never lie. It's politicians, bankers, and lawyers that do. So, the book, Planet Ponzi, walks you through the numbers. I use the government's own data, which is important. So they've created a market. You just change the goalposts, like the unemployment numbers. Let's show the U3 number, which is 7 and change, where the U6 number should be probably closer to 20%.
Or the Dow Jones itself. People will quote the market They refer to the Dow Jones Industrial Average, but the components, the 30 components of the Dow Jones, are constantly changing. And just like the hedonic adjustments to CPI, GDP, and all the statistical anomalies and unemployment, this is done to massage the fact that the market may look like it's up, but in fact there's a lot of underlying weakness. I want to get back to Ed Miliband for a second, of course, as the opposition leader here in the UK. He's making some speeches this week. He, as you mentioned, he's talking about price caps on different parts of the economy to try to restore some balance. And you're saying, hey, Nixon tried it, it's a waste of time. But in a way, though, if you look at what Ed Miliband's proposing and your criticism of it, it's kind of like the bookend to the monstrosity on what the right wing has been proposing. In other words, George Osborne, in his buy-to-let scheme or his right to buy or guaranteed mortgage scheme, his Ponzi scheme, is as ludicrous as it is to support bankers. But Ed Miliband's policies are kind of the bookend of that. Now, would Ed Miliband maybe get better traction if he simply said, you know what, we're going to reform banking, get rid of Wonga, get rid of the criminality, put bankers in jail? What if he came out with a message that said, instead of coming out with price controls, said we're going to take the biggest malevolent force in this economy, the banksters, the criminals in the city, and put them in jail? Wouldn't that be a better policy?
I think that we need massive amounts of change. I don't know that there's political will to do it, because I think the lobbyists step in who support the politicians. The politicians are academics, so they don't have a background in real business. The markets are have been so heavily manipulated for the past 7 years that there is no more price discovery. I mean, you had junk bonds trading lower than 5%. That's a disaster. It's called junk for a reason. So you need to have a basic market mechanism where pricing can maintain a real price rather than the government coming in and supporting it. And to tell, in a capitalist system, I don't care, the energy companies, you've got to have legislation to stop them from gouging. That's a separate issue. But you can't come in and say, I'm going to cap your prices and you can't make a profit. I mean, that's capitalism. You deserve to go bankrupt if you run your business poorly. Like, if I had a survey and I went out and surveyed my customers, this is very relevant, and 90% of the customers didn't approve of the job I was doing, and that's a public survey, many surveys, not one, it's not an outlier, this survey. Would you invest in that company, or would you think that the business model is flawed?
If I believe that they were getting away with criminality, of course I would invest in that company. Like I would invest in Corrections Corps of America, even though it's one of the most corrupt companies in America. Monsanto, Exxon, they're eco-terrorists, they're prison terrorists, but HSBC, financial terrorists. But if you're trying to make a return on your money, that's the game today. You have no choice. Anyway, Mitch, we're out of time. We got to go. But thanks again for being on the Kaiser Report.
Thanks, Max. Pleasure to be here.
All right, and that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I want to thank our guest, Mitch Firestein of PlanetPonzi.com, which is a website and a Twitter account and a book. If you'd like to get in touch, tweet us at Kaiser Report. Until next time, Max Kaiser saying bye, y'all.